Today you have a video from me to watch that I put together for you based on what we will deal with for the rest of Chapter 3, which is budgeting. Before we get to that, just a reminder, by now you should know the difference between gross pay and net pay if you receive a paycheck. Some of you have already experienced this. Gross pay means the total amount that you earned, but there are deductions from that amount. Some things are required as deductions. For example, employers are required to take money out of your paycheck for federal income tax, state income tax, FICA, for example. There are also some deductions from your paycheck that are voluntary. If you decide you'd like to uh, have money deducted that will be contributed on your behalf to a charity, that sometimes can be done through your employer. So, at any rate, there are deductions from gross pay that end up with a concept called net pay, sometimes referred to as take home pay. The rest of Chapter 3 will deal with this take home pay. How do we handle that money? And the best advice anyone can give you is that you need to create a personal budget, particularly if you eventually get a full-time job and become self-sufficient living on your own. And this may be well down the road for you, but it's a good idea to get this idea started early. So it's a good idea to put together a personal budget to deal with the money that you take home and the expenses that you might have in addition to the payroll taxes expenses. On your screen, you see a sample budget, and we'll go through this in a few moments. But first of all, before we do that, I want to explain that this budget is shown on a program called Excel, Excel. This is a very powerful spreadsheet program that some of you may already be familiar with. If not, I want to walk through some basics because it impacts what we do with this sample budget. First of all, let's take a look at what we call cells. If you put the cursor up here in this little block, right above it you see A1. That is the name of the cell. Column A, row 1. If I put the cell or the cursor way over here, you can see that it is now in this box way up here, H7, row H, line 7. Now that's important for our budget, as we'll see in just a moment. On the screen, you see a sample personal budget that has 3 parts. There is something called net monthly income, monthly expenses, and monthly savings. So if we take a look, first of all, at the monthly income, over here, you see highlighted in yellow the total. Net monthly income is $1,365. Apparently this person has 2 part-time jobs. And again, if you look at this block way up at the top, this is cell E10, column E, row 10. But what's even more important is up in here on this part, what we call the formula bar. If you look up here, this says equals sum D8, which is a cell, and colon D9. So D8 is this cell, D9 is this one, and this is the total. This will automatically add these two numbers, the numbers in these two cells. And what's helpful with the Excel spreadsheet program is that if this number changes, let's make it a big change. If this is not 900, but it's 1900, you can see what happens to the total. It automatically changes. Now this will be very helpful with a column of many numbers, as we'll see. So this is important to the concept of using the Excel program. Let's take a look at another total. For example, this is, if we look way up here, cell E22, column E, row 22. And in the formula bar, you see the formula equals sum D13 colon D21. The colon indicates through. So it will add up everything from this cell D13, all of these numbers all the way through cell D21. It adds all those numbers and it's shown here. So once again, if this number is different, I change it to 200, then my total is going to be automatically re-added and correct. So that's a very helpful feature. So this person has total expenses of $1,045. The person earned in the month, this is a monthly budget, earned $1,365. Now, two things about this. The fact that we have earned more money than we spent doesn't mean we should just go out and spend the rest of it. It's very important to consider the concept of savings. Also, a lot of people talk about living paycheck to paycheck. This means for some people, the number of representing total income and the number representing total expenses might be the same. If that's the case, then they are living paycheck to paycheck. The problem with that is if all of these numbers of expenses stay the same, then you can do that because all of your expenses are covered by your income. But if one of them goes up, if your personal finance teacher says you need to buy more school supplies and you need to change this to 125, then you're possibly in big trouble because that will increase the amount of expenses, and if you don't have any extra money to pay that, then you're going to be in a deficit situation. In this case, this person has expenses totaling $1,045, and the difference then will be put into savings, which is a great idea. This person has monthly savings for various things, one of which is for gifts, for family, friends, and so forth. He or she decides to save $20 a month for that. And car insurance. Let's look at car insurance for a moment. This person apparently has a car because he or she has a car payment of $350 every month, and car insurance is going to be a requirement. But it's not listed under expenses, probably because most times car insurance will be paid either every 6 months or perhaps annually. So the person is wisely putting money into savings, $125 every month, so that at the end of 6 months, he or she will have money saved up. So when that car insurance bill comes, all he or she has to do is take that amount of money out of savings and pay the car insurance. So every month, the person puts into savings $125. So 6 months later, that total adds up to the bill for car insurance, hopefully, and the money is available. Car repairs, maintenance, same thing. This is a guess. Obviously, we don't know how much it will cost to maintain the car, but we hopefully can make an educated guess. But we need periodically to change oil, and periodically we may need to buy new tires and so forth, so it's important to save money for that. There's some money saved for vacation, for future vacations. And then we have money saved for federal and state income tax. Now that's already deducted from the paycheck. But sometimes at the end of the year we find out not enough has been taken out of paychecks. So just in case, it's wise to put some money into savings to cover the difference if perhaps the employer did not take enough money out of your paycheck. So there's a little money put aside in savings for the taxes. And charitable giving, always a good idea to get in the habit of giving money to charity. Simply the right thing to do. A good charity might be your Catholic high school, for example. And the other advantage of doing that is giving money to a charitable institution is tax deductible. You can reduce your taxes a bit by doing that. So we'll talk about all that later. But the importance here is that we have a number of things that we have saved money for, totaling $320. And when we add the amount of savings with the amount of expenses, that comes to $1,365. And again, the important point to make is that total income balances out with the total of expenses and savings. This is what we call a balanced budget. So again, at the beginning of the year, this person has created a budget that has three parts: the income, the expenses, and savings. It's important to have all three parts so that when we complete the budget, we will have the total income equaling the total of the expenses and the savings. Now, if, for example, something happens that we have a large increase in an expense, for example, let's say that we splurged and bought a TV or something very expensive, and this, instead of $150, we spent $900 here. You can see that they no longer are going to balance. We now have a situation where we've spent more money than we've taken in, which means we're going to have to take some money out of savings to cover the difference. And that may not be a wise thing to do. So we have to plan for contingencies. In other words, sometimes we have, let's go back to where this was. Sometimes we have expenses that we didn't expect. That's why we have the miscellaneous expenses as part of the monthly budget. Now, hopefully, after a while, we have enough money in this area to cover an unexpected expense. And if that's not the case, maybe we need to redo our budget, make this a higher number, and save a little less money. So we'll be talking about that in the next several assignments. We'll be looking at some problems that will deal with this sample budget. At this point, I want you to go back to your course page and answer some questions.